Hi and welcome to this week's Big Picture. So just to follow on from last week actually, firstly, it seems like some of you like the grid I did, and I'm going to run through that same grid this week. I say the same grid, it's almost the same as it is actually, looking at the strongest and weakest of the pairs. So we'll do that in a short while. Let's have a look at, firstly, let's get rid of this pen thing and look at where we are overall. As I said, normally what we're looking at, it's the central banks, what they're doing, what the big players are doing in terms of money, what's coming out this week. I'll talk about what's happened over the last week, and we'll look at the trends of the markets. So no further to do. Looking at the US dollar now, as I've already said, nothing's changed here. We've got actually only one increase forecast of 220. In 2019, no increases due. It's all data dependent, but I think to bear in mind that one cut's already been priced into the market, so that's certainly been done there. That's later in the year. Now, looking at the sentiment on the US dollar, now the volume of US dollar futures is a lot less than some of the other markets. It's quite light in relative terms, so it can only give us a light guide really. But asset managers still dropping off their holdings there. But the hedge fund managers are actually slowly increasing the long position, so still mildly bullish. So the key movers as we look through this market, well, last week we saw retail sales coming in, it missed the number. The Philly Fed manufacturing came in better, a lot better than expected at 16.6 versus 10, so there's positive data coming through, and consumer sentiment was much higher than expected at 102.4 versus 978. So there's some bullish stuff coming in. Key movers this week, really, Chinese talks are on hold, and it almost looks like they could be off for some time, the way the banter's going at the moment. Core durable goods due out this week, and FOMC speakers, lots of them. There's not a lot of other data coming out there, but I'm sure Trump will keep us entertained, or not. Okay, so that's the pound. The pound, US dollar. Let's just clarify for you. That was the US dollar. Overall, still looking potentially bullish, particularly when we look at the S&Ps pushing off there. Technically, we're seeing the weeklies are still solid on the US dollar, and the dailies there push back up there, looking quite in a reasonably solid trend there. So overall bullishness. Euro dollar. Now the euro last week, what do we see? We saw German economic sentiment coming out -2.1, so negative number there versus plus 5.1 expectation. We saw GDP coming out in line for Germany and Europe, so both at 0.4, all expected. So certainly not setting the world alight on those numbers. Looking at what the big players are doing though, the asset managers are still pushing into the euro. They're probably hedging things. I say hedging, but just spreading their risk a little bit here, moving away from the dollar a little bit as it's standing. And you're seeing this sort of move up into a more positive figure, and the hedge funds are actually reducing their short positions here as well. There's a reduction in short positions, so overall it's a bit of a euro bullish sort of move, although as I said, the numbers aren't looking good, and what we're seeing this week, I mean, fundamentally it's quite flawed, and as I said before, fundamentally the euro is a flawed currency, but money moves at times, and it might aid the euro. It doesn't fill me with lots and lots of confidence. It's sitting there somewhere in the middling of currencies. But as I said, as we're seeing the bigger money running there, it may be a sign for us. Now, this week we've got the flash manufacturing data and the European parliamentary elections, 23rd onwards. This certainly could create some dullness, if anything else. At the moment, the euro dollar's in a downward trend, so we've sort of got this, not necessarily fundamentally. If you run across here, fundamentally it's negative, and they're risking things here. The fundamentals that are coming out weekly on a weekly basis coming out. Technically, we're weak. This is the odd ball out here, but which could see that mean that the euro sits a bit flatter, and where the money might be going, particularly as it's sliding out of other places. Just to confirm, the US dollar there then is flat to sort of lower, slightly lower on the outlook there, but fundamentally, some of the data that's been coming out has been reasonably bullish overall, and the key movers out this week where the trade talks is really spoiling things at the moment for sure. So we'll see if the FOMC speakers or key durable goods do anything, but a bit of a mix, more of a mixed bag there as well. So as I said, with the euro and the dollar, they're both a bit mixed at the moment. The pound, oh my goodness. There's some half decent numbers coming out. The average earnings was a disappointment in terms of data coming out, which would create inflation, which in turn would see the put pressure on for interest rate increases. So that's been dropping back. Unemployment numbers have improved. I mean, we're down at 3.8%. We're really sitting there low at the moment. There's more bullishness in the pound in terms of fundamentals than there is in the euro. There's room to cut interest rates if necessary. Of course, the Brexit situation hangs over as a very dark cloud. Money's come away from the in terms of the asset funds, but it's not significant masses of shorts, net shorts positions sitting there. In fact, the hedge funds have just eased back on their long positions slightly there, but either way, we're not on it. It's not massively weak from that perspective. Votes this week, we've got Brexit votes. Well, I don't think they're coming out till June actually, but we've got this Euro elections going on, which in itself could shake things up, particularly if the Brexit parties really get a push on and the main parties get another kick in. And it's not really good for the pound, and we're seeing that in terms of the weekly and daily trend at the moment on the pound. So really, it's got potential, but it's not living up to anything at the moment. In summary, the euro fundamentally is flawed. Another one that's flawed, but the big money started significantly reducing short positions, as has the hedge funds. Both have chunked out of the hedge funds, almost halved, I think. Big move down in terms of the net short positions. No major data expected this week. On a weekly basis, it's still choppy and difficult to read. Really, on a daily basis, it's bearish or stronger for the yen at the moment. So it's erring that way. So overall, it's well, as I said, and I keep on saying, it is the safety currency and where the money's running to when the muck hits the fan, effectively. Aussie dollar, still expected on the one side here to be seeing the next change maybe as a reduction. We've got in terms of we've got the Reserve Bank of Australia Governor Lowe to speak coming up this week. What's happened with asset manager money, hedge money, still bearish, really, largely bearish, and certainly technically it's been a real bearish week, apart from one day almost for the Aussie dollar. So it's certainly weekly it's still negative, and there's undoubtedly things to do. One thing to bear in mind, that there was an election which was seen as a positive election with that's maybe, if the majority is there, it could mean that things are done to stimulate the economy, and in which case the markets may read that as a positive step to what might come. Canadian dollar, well, we had inflation out last week, 0.4 versus 0.4, pretty much in line. Manufacturing sales coming up to 1 versus 1.5, so some more bullish news than we've seen for a little while maybe there, but there's still that dovish tone with the Canadian dollar from the central bank perspective. There's nothing here to sort of, with inflation at just 0.4, is nothing there to really get them excited. Other things here, we've got retail sales count coming out this week. What's happened? The asset money is increasing their short positions. The hedge is just reducing theirs a little bit, and it really does show on that daily basis. It's such a chop. Okay, it's the big picture. It's still bullish, but there's such a chop there. Maybe it'll roll over. It may be a currency that does see a benefit. The consensus of OPEC was to reduce production, but we'll see whether that actually comes to being. Oil hasn't really moved significantly since the weekend in that meeting. Okay, that leaves us to the New Zealand dollar. There was no data last week. Potential next move would be down again. We're looking at here. We're still asset managers' money coming even more negative. It was slightly bullish last week on the hedge funds there. It's moved up a little bit more bullish maybe, but more negative asset money I'm really looking at. And technically, it's certainly still the weak link here. So that's certainly the weak link. Looking at S&Ps, they are continuing to see, or we are continuing to see, a reduction in the level of net long positions with the asset managers. Now this doesn't happen that often that they like reducing, but they're certainly reducing, and that's there's a key sign there. But we're also seeing a reduction with the hedge funds. That almost they seem to go a little bit more the other way on this, but so it's maybe a bit of a mixed picture from that point of view. But the market as a whole, technically weekly it's been up. Daily it looks like from a short-term trend wise it's towards the downside. Now I'll just give you a summary. In fact, I'll give you the summary on the chart. So actually now I'll give you the summary here in terms of the weaker pairings or where we may rank these. So really the euro still the US dollar still the strongest here of these markets. The others are starting to sort of then get into sort of second tier, and there's a sort of, last week we had the euro and the CAD sitting there in that sort of second tier area. Maybe they're still sitting there. There's potential, but also moving from what was a stronger position and back towards that second tier, possibly the yen. So we're sort of moving to that second tier where these are sort of got potential, but not really showing so much. And then we got the third tier currencies that are weak at the moment, the Aussie, the New Zealand dollar and the pound, and they're all weak for a good reason, of course. So that's the three weaker pairs. So if you're looking overall, the weakest of the weak, probably the New Zealand dollar, with the pound not far behind it. The Aussie dollar may get to see a bounce on the good news from the voting. So from the elections, that's where we are in terms of putting things into perspective. In terms of, if you was looking for cross pairs, as I said last week, play the strongest against the weakest, and you may do something good there or see some good. Even some of these second tiers against the third tiers that I've just sort of ranked it here may give you some good trades. Right, let's look at the technicals pretty quickly then. As we run through these markets, and we'll just look at dollar index. You see it still pushed a good solid week last week. From a daily point of view, it's pushing back up towards the sort of double top territory. Softened a little bit today, but we'll see how things run. It could just continue pushing up there. Sorry, let's bring in the euro. Euro technically bearish there on the weekly point of view, technically also, but again as an inverted dollar index effectively, or the dollar index is inverted euro because of the big weighting of the euro on it. Maybe it could be looking to pitch up, and I think that would be quite a nice point in the next day or two if we ran into the sort of trend line I drew last week, which was a key trend line at that point. It runs back into that with that weekly pivot. That could be good for a short point of view. I'm not overly bullish on the euro, but we'll see. The pound, well, we're seeing it. It doesn't matter which way you want to look at this from a weekly point of view. It's soft, and daily at the moment it's looking very soft. It's so soft here that maybe something positive may give it a really big move and up to the upside, and I wouldn't be shocked if we saw a solid move up at some stage, but maybe not now. We don't know when it's going to happen. Dollar yen. Let's have a look from the weekly point of view. Dollar yen is just sort of running back into some resistance and cloud formation. For those that watch that, it's maybe it could pitch up towards the weekly 21 and give some resistance. Really depends on how this it is such a risk play at the moment. As I said, it's just coming up to, it's already into some resistance where it's moved off of today. Maybe push up a little bit further. Weekly 21 could be a point of selling if it shapes up. Aussie dollar, well, I don't think we really need to go to the weekly to see. We'll just look at the daily, and you can see from this picture here, it's been pretty bearish, a bit flat at times for weeks, but or months even. But it's just kicked up on the good news. I can't see anything changing too quickly to change that around, but we may just get a little bit more of a bounce from it. But in reality, I'm looking really on the short side still there, but possibly not quite so weak as it was. Canadian dollar, well, again, this is not the big picture is a bullish part, but you can see here technically it's a currency to be trading between ranges. There's little to be done on from a daily perspective there. New Zealand dollar has been good for the downside. Across most, it can be traded with many of the majors. It's playing quite nicely. So it's the New Zealand dollar, US dollar even, and if you compare it with say the yen, even with the yen, which has given away some money against some of the other markets, it's still looking weak across that. I'm just looking at other New Zealand, even as the pound. Now the pound's been pretty weak. This may be a bit more, but I'll say that even that. No, the pound's giving away some on that. As a pound New Zealand dollar, it's a bit soft there. But as I say, with most currencies, the New Zealand dollar's taking quite a hit. The euro New Zealand dollar, here we go. Euro's been pushing up and continue, but it's fluffy itself. And the euro, as I said, the best trades here really is the US dollar versus New Zealand dollar at this moment. The other currencies are just a bit stalling. Right, okay. S&Ps just to finish off with, and well, what we here then, I'm going to come out to the weekly if I can. There we go. And it's not a major correction that we're sitting in by any means at the moment, but the big money's sort of starting to edge out of it, and I do think and do wonder, unless there was a significant step towards some sort of deal, which I think would have pushed it back up towards that 3,000 level. At the moment, it just looks like it could run it and trickle its way downwards. It's done like an A, maybe a B, running through last week in terms of the potential towards the beginning of the week there, or middling of the week, pushing upwards, but rolling back south again at the moment. So that's where we are with the markets overall. So dollar seeing the dollar itself, dollar index is seeing strength, maybe partly uncertainties around the equity markets and everything else, of course. I wish you a great week. I'll be back next week on the big picture, but of course you can catch every day. I do some analysis on the markets for the coming day, which obviously looks at the nearer term. Have a great one. Bye for now.